Welcome to the Offshore Club's most riveting and revealing offshore lifestyle podcast, Open Mike, with Mike Cobb. For more than 20 years, Mike has worked and lived in Caribbean countries from north to south and the Atlantic to the Pacific. Nobody knows it better. And now, here is your offshore ambassador at large, Mike Cobb.
Hello and welcome to Open Mike with the world's leading offshore investment entrepreneur, Mike Cobb, and I'm fortunate enough to be your host, Carter Clues, the host also of Coffee with, Mike, I got to get a plug-in for myself.
Yeah, get it in there. Come on.
every Monday at noon on offshore.club, and at offshore.club is also where you can find Open Mike. And this is the number one investment podcast on the air, okay? And now you're going to see why, because see what we're going to launch into. We ready to roll, Mike?
Yeah, you were just in Florida this week, weren't you?
I was in Florida. I've been down there for several days with several of the country's leading investment advisors. I mean, these guys are really top flight. Some of them from Money Map Press, just outstanding people. And you know, we're discussing a lot of things, but also the stock market and where the smart money is going now. One of them, by the way, had recommended that I read this book, which I'm going to recommend to everybody right now. It's old, but it still is the best. One Up on Wall Street with Peter Lynch. It's just outstanding. And what made me think of all this in relation to you, Mike, is one of the things Peter Lynch says early in the book is don't invest in the market. Don't invest in the market. Invest in companies. Okay.
Yep. So, exactly.
And you said something very similar on last week's show. You know, when you were giving the what to look for and what to look out for in an offshore investment. And I want to build on that a little, because I have a feeling I'm telling folks, you know, be a little careful. Yeah, the stock market is booming, but don't forget, 3 weeks ago, everything you heard was invest in SPACs. Oh my God, SPACs are the greatest investment in the world. Mike is laughing. And now, you know, when I was down there with these top investment advisors, one of them started laughing and said, remember, I'm the guy who told you don't do that. Okay. So you got to be careful, folks. But I believe, and it's the direction I'm going in, the smart investments are offshore. Mike, you're the guy who does it.
Yeah. Let me just say that, you know, I like Peter Lynch, and long before algorithms took over, you know, the stock market, right? You had people like Lynch and others who understood, you know, the big concepts of investing. And yeah, you look at Lynch, you look at other major successful investment leaders over the years, and you know, Stan Druckenmiller from Duquesne Capital is another one, right? Yeah. I mean, the idea of investing in businesses, right? And businesses are people, their ideas, their business plans, so those are important things, right? But at the end of the day, it's a team. That's what you invest in for the long term. And these algorithms and stuff, you know, these are all short term, up and down, blah 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 blah. But at the end of the day, if you invest in good businesses, great businesses, right? Great businesses that serve a consumer need and serve it well, you will have a very good investment. My father-in-law did that. I mean, he invested in companies that served a need in the consumer marketplace. And I think your point about SPACs is right on. And, you know, and one of the things that we've seen, we do a lot of work in the crypto community, because we are one of the few, we were the first and one of the still few development companies that accept crypto as a form of payment for properties or our residency programs or even ownership in our company. People can actually own shares of our company, and we will take Bitcoin and a few other cryptos as payment, right? Well, the crypto market just crashed like 30-40% last week. And so the people, you know, that had taken some of their money off the table, and I think this is the key. You mentioned that, you know, that a great methodology of investing is to go offshore. My personal opinion is the best investors are broadly diversified. right? They're diversified,
Right.
right? They have something offshore. Maybe they have some in crypto. I don't know if you're into crypto or not. A little bit in crypto, some in metals, right? And maybe, you know, some in real estate that you physically own, not REITs or anything like that. But then some in the bond market, some in the stock market. And if you're diversified, you can catch the upsides of when those happen in any of those sectors. And when one of those sectors or a couple of those sectors are down, you know, typically other things kind of pick up. Like if the stock market's down, maybe gold is up or silver or something, right? Or, you know, maybe you have a basket of currencies. That's the other thing, right? So we've seen the strengthening of the US dollar under the Trump administration. You know, we had an incredible strengthening of the US dollar. And now we've seen it start to go back the other way. I keep track of the Canadian dollar. I have some Canadian investments, and I keep track of the Canadian dollar. And it was, you know, it was as low as 74 cents, and now it's 83 cents today, right? And same, I don't keep track of the euro as much and the pound, but they're trending that way too. So the idea is if you're diversified, then you've got some, you know, many baskets to put your eggs in. And Carter, you and I are both on the same page with offshore. Most people don't get it. They ignore it. They don't understand it. They're afraid of it. I don't know what it is, but physical assets offshore is a powerful diversification mechanism because, right, because they're not necessarily tied to the U.S. markets or certainly to the U.S. stock market. If you own a condo in Belize that people come down and go on vacation and it rents out, guess what? Like even if the stock market's down, people are still taking a vacation. They're going to Belize and your condo down there can rent out and earn a nice income for you, right? And it's a hard asset, right? It's a physical hard asset overseas. So you know, I'm a big fan of offshore, but wouldn't bet the farm on it. You know, I wouldn't bet the farm on any one thing, right? No one thing.
Well, no, and I love what you're saying about diversification because, folks, keep in mind, in an average year, the stock market varies by 50% above or below what you bought for, okay? So you can't play it. Don't try to play it. You get in and you stay. It's just like when I was in sports handicapping. Don't jump in and out. Now, the thing I like about offshore is it is land and it's going to stay. Now, let's address right now. I know there are people out there saying, "Yeah, Carter, you keep saying that, but what happens if one of those Banana Republic dictators seizes the property?" Nobody owns more property, folks, than this guy right here. No, I would wager there's no single person who owns more property in Central America than Mike Cobb. Right, Mike? Am I right?
That might be a little bit of hyperbole, but
well, that's what I'm into. That's what I do.
I know. Well, we do own a lot of property today in 4 countries: Belize, Nicaragua, Costa Rica, and Panama. And we don't worry about confiscation at all. You know, the reality is if, you know, all of these countries really want and attract and protect. That's the key word here. Protect foreign investors. They want you to come down and own a home, and they want you to come use your home or turn it into an Airbnb or something, right? So it rents out and the tourists have a place to stay. Because whenever people come and stay, whether it's you living there, right? Let's just cut to the real bottom line. A North American who lives in Latin America, for example, is probably spending 10 times the amount of the average person at the grocery store, at the gas station, at the, at the hardware store, at the mall, buying clothes, whatever it is, going to the movies, going out to dinner. We have so much more disposable income than the average person in those countries. So even if you're a retiree expat and you're living on $1,500 a month, which in the US wouldn't get you very far, down there, $1,500 a month is, well, it's not 10 times, but it's 5 times the average wage, right?
Absolutely.
Right. And so they want us to come and be, you know, expats and retirees, and they want businesses like ours to come down. They don't want to take our property. Like they absolutely don't. The people who get in trouble, Carter, this is what we talked about last week. The people who get in trouble are cheating the system. They're coming in and it's the deal that's too good to be true, right? They don't do their due diligence. They don't hire a lawyer to check out the title. And all of a sudden they buy something from some guy they met at TGI Fridays who's friends with the president or the president's nephew or whatever the BS story is, you know, and right. And then they end up with a piece of property that he didn't have the rights to sell because he didn't own it or whatever, right? And so like, if you do just what I would call normal due diligence, not even enhanced due diligence, just do the same due diligence you would do in the US, and you can be very safe and secure overseas. It's when people try the shortcuts, or they think it's all fine and dandy, right? I like this guy. He's the greatest thing. That he took me to, took me over to see the, the Assembly or whatever. No, yeah. Well, so what? Hire a lawyer about the title.
Or the big danger is, and folks, a lot of you are going to follow us and go down there. So let me give you one of the big dangers is, and Mike's going to laugh when I say this, just because they speak English does not mean they're trustworthy. Okay. That is just, man, that's one of the things I fell for the first time I went. When I'd run into one of them who spoke English, I thought, well, good, I can relate to him. He speaks my language well.
Right. But
no. But okay, back on the confiscation.
Yeah.
25 years you've had property offshore. Have you ever seen the government just come in and confiscate an American's property?
No, I haven't. And I've heard stories. I have heard stories. I know of people whose property has been confiscated, but I can tell you when that happens, it's because somebody bought a property that was not legally for sale.
Well,
It was cooperativa land, right? It was land that was given to 20 families, and one of the people, right, decides they're going to sell it. Well, the other 19 have to sign off on it, and if they don't, it's not a legal transfer, right? So I would never touch cooperativa property. In Panama, you have called what's rights of possession property. It's not titled, right? Whoever lives there has the right to live there. It's the right of possession. These people try to sell it, but it's not title, right? If you get in Latin America what's called escritura publica, public title, registered title, really easy to check out. Pay a lawyer a couple $1,000, done deal, right? Right? I have never in all 25, actually it's about 27 since I started. I bought my very first property in 1994. So what's that? Yeah, 7 years ago, right? Anyway, but the if somebody bought escritura publica in any of the civil law countries or fee simple title in Belize, for example, it's common law. I have never seen anyone who did that lose their property. It's only when people, try to, go around the system or they're buying stuff that's not really legal for sale. So just stick with the good stuff, stick with the straight stuff, right? By the way, the Consumer Resource Guide we talked about last week talks about this. So okay. I hope folks will get a copy of it and just real simple stuff, real basic stuff. We just have to remember to do it.
And they can get it at info, ECI Development at info.com. No.
Info at ECIdevelopment.com. Right.
I got it exactly backwards.
You did.
Yes, I did. Info at ECIdevelopment.com. Okay. So the land is safe. Now, how about the profit margin? Let me preface it with this, if I may. Folks, your profit margin in the stock market is not that high. Even in good times, is not that high. Random walk is 9%, but it rarely even hits 9%. Okay, remember that's average for years after year. So it as one of the people I was with over the weekend said, it's not just where you invest, it's the way you invest. Okay, which means if you're in the stock market, you got to keep a careful eye. It's going to go up and down, and if it goes down and you're stuck with it, you're not going to make a damn cent. Now, if it's going up, yeah, you may realize if you invest really good with a very short person, there are some stocks that could bring you 20. They were citing one when I was down there. I should have written it down. I could have shared it with you. I didn't write it down. The guy was saying I'm looking at 30% over the next a year or so, which is great. But that's the rarity. Yeah. But remember, it's variable. It's variable. Okay. Right. So keeping your eye on it, totally, you really have to do that. Whereas the offshore investment, one of the things I love about it, this is land. This is land. It is there. It is going to go up. But by what percentage? I don't know. What, Mike? What would you say?
It depends on the country, right? If you buy something in Nicaragua, which is probably one of the least popular countries of the region, you're going to see a lot of price appreciation because, as the country becomes more popular, the price of real estate goes up, right? If you buy a piece of property in the Guanacaste Peninsula of Costa Rica, right, it's kind of at the pinnacle of popularity and price appreciation. Will it continue to go up? Sure, but not like it would in, say, Nicaragua. And if you said, well, I want something in the middle, I want something that's going to give me some appreciation, but I want some cash flow because it's popular enough to cash flow. A country like Belize or Panama gives you that, right? They're great emerging tourism destinations, and so you can kind of pick what you're looking for by picking the popularity of a country. And let me just be real up front, Carter, because I it's not all peaches and cream. I mean, the rose bushes, the roses are beautiful, but there are thorns in there too, right? And we covered a couple of those. Just because they speak English doesn't mean they're trustworthy. I mean, there are lots of thorns, right? But the other thing is, it doesn't always go up. If you owned a condo anywhere in Latin America last year that was a rental property, you didn't do very well because COVID shut down all the flights and people weren't traveling and people weren't going on vacation. So, it was definitely a down year from a cash flow perspective. However, the asset itself was still there. Maybe it was flat. Maybe even the value dropped a little bit because there was a buyer's market, right? I don't know, right? But the point is that it's not all peaches and cream, even when you have an offshore hard asset. But it is generally pretty predictable cash flow. And again, if you're buying something in an emerging market like Belize, I'm a big fan of Belize because it's English. It's 2 hours from Miami, 2 hours from Houston. Great airlift, great notoriety, great notoriety in a good sense, great PR. And it's an emerging tourism destination. So you know what? You might have your up years and down years like last year with the COVID, but overall, Belize is going to do very well.
But let me ask you this, because I really want to drill down to the nitty gritty here. Let's say that, all right, let's take an example in Belize of properties you own.
Yep.
Okay. All right. Give us an example. And folks, I want to preface it with this, if I may, Mike. Folks, we're not here to sell Mike's property. Okay. This is an investment show.
No.
We're not here to sell, but I'm telling you, they are good investments. It's just that simple. Well, on the one hand, I'm not going to sell them to you. The other hand, I'm going to let you buy them if you want to, because I think it's a damn smart buy. But give us an example of properties you've sold in the past, where they are now, where you think properties that are there, and use examples because it's good for people to know.
Sure. So we have two, well, now a third community, but it's just in construction. But we've had two communities on Ambergris Caye for many years. One of them is the Bayman Gardens, and for many years it was independently operated by us as the Grand Bayman Gardens. Well, last year, a little over a year ago now, we picked up a Best Western franchise, and so now, if you had bought one of these condos, say 2 years ago for whatever, I don't know, lots of different models, lots of different sizes, right? But let's say $99,000 for one of our standard one bedrooms. Today, with the Best Western branding, I think they're $149. What's that? Like,
wow.
50 grand in 2 years. I don't know, something like that. Whatever. Yeah, right.
It's phenomenal.
Right. And some of it absolutely has to do with the branding that came along, and nobody could predict that. Although, we try to be transparent. We're working on a Best Western branding for our Bayman Gardens, but maybe it'll happen, maybe it won't. It's the future. Well, it did happen. We got it a year ago, so now we're Best Western. The other thing we're doing, and by the way, the one bedrooms today are $149. The studio residences, I think, are $109. So, like, if somebody has $110,000 or even half that number, they can 50% down kind of thing. You can own one, and it does pretty well. I can't talk about rates of return, but it does pretty well. And the other property that we're developing right now is the Marriott Resort and Residences. Same thing. Residences there start somewhere right around $299, so call it $300. Oceanfront Marriott Residence. It will be operated and run by the Marriott Corporation and a company called Highgate Hospitality. We have nothing to do with it. We're the ownership group, but for a very small number of people, and this is important, Carter. Let me just say this. This is really important. There are 202 rooms in this Marriott residence. Our corporation is keeping at least 130 of them. We're going to keep 130 of them because we believe that they will be highly profitable, generating cash flow. we're selling 70 of them, right? Up to 70 of them. And that's it. So, one of the questions that I think really tells the story, if you're looking for a condo or a property investment overseas, that would be a rental property, is simply this one question that you can ask the developer. Mr. or Mrs. Developer, these condos are going to be great. You've shown me these performers. You've shown me the rates of return, all the different projections, blah, blah, blah. Wow. And usually it's north of 10%, right? So, wow, it's 11, 12%. That's awesome. How many are you keeping?
Right.
What a great question. Right. What a great question.
Cash flow. For the cash flow.
I want every bit of, 10, 11, 12% I can get. Right. And so, there is the reality of selling some of your condo product to pay for the construction of the building. Right. There is that element. Right. But it's not all of them. So the question that's really relevant, that tells truly how much the developer believes their story, is how many are they keeping? In the Marriott property, we're keeping over at least 60%. In the Bayman Gardens, the Best Western property, we keep 20% or more, sometimes as much as 30%. So again, we keep them because we want the cash flow that we're very sure they'll generate. But if somebody wants to own one alongside of us, they can, and it should do pretty well for them.
Yeah, and I know you have to jump off almost right now, but so you pointed out, when you look at a property offshore, look at asset acquisition. Okay.
Yep.
Is it going to increase in value? Look at cash flow. And Mike just described that to you. And if you go to with ECIdevelopment.com, look it up. You'll see those. But also looking up one-offs too. Look in other areas. You don't. Mike is someone now and you can trust, and that's a great thing. But also look in other areas and weigh some of the things he tells you about every week. So, Mike, I know you have a hard deadline. You've got to jump off.
I do. But this always a pleasure, Carter. Happy Friday, man. Enjoy a nice weekend. And I look forward to dining at breakfast with you tomorrow morning. It's nice that we're going to both be in the same part of the world and we can have breakfast together. So I will see you tomorrow morning at 8:30.
8:30. Perfect. Thank you. Excellent.
Thanks, everybody. Bye.
Bye.
For more information on the Offshore Club or to contact Mike Cobb, visit offshore.club today. Offshore.club. See you next time at the Offshore Club.